Hey, Dustin Tibbetts, financial advisor with Jazz Wealth Managers. How you doing today? Hope you're having a good day. We're going to try something a little bit different. Last Monday, we did a sort of a more geeky stock profile type video. I'm going to do the same thing again today, but we're going to talk about volatility in dividend funds. See, when you build a dividend portfolio or you pick dividend stocks, don't you want the quietest ones out of the group? We don't want a lot of day-to-day fluctuation. We want it to be nice and tight, right? If you're sitting there trying to soak up the yield, then great, you want slow, tight portfolios. You don't want big volatile stocks because then you would just choose like a growth fund or an index fund or something. So I want to give you a couple examples today. We'll give you some of the geeky stuff here. Hope you enjoy it. Okay, on the screen what you see is I took the S&P 500 and I took 40 dividend-paying stocks with just the highest yield that I could find throughout that. Now, what you're going to see here, you got ticker symbol, you got the company in case you know who they are, the sector that they come from, the dividend yield as listed currently, 1-month returns, year-to-date returns, and overall volatility. Now, if you look at the dividend yield and you see any names that currently are not paying a dividend, they're still on record as being going to pay a dividend. So there may be some on this list that are not going to eventually pay the dividend. But stick with me, it's a lesson. All right, so here's what we got. These are 20 of the lowest volatility, volatile stocks. We've got Verizon. Currently ranks as the least volatile dividend-paying stock in the S&P 500 right now. If you see green shading or red shading, I saved that for the research site. That's just a little extra thing there that these are trading fundamentally below average compared to their peers in the sector. Separate topic. Anyways, so here's what we got. Verizon, lowest volatile stock, paying 4.23%. Put the 1-month returns in there and year-to-date just so you could see if anything's starting to stick out as waking up. For example, Southern Company obviously has had a good month, recovering about half of what it was down. And so maybe that's something to look at. I don't know. That's just, you can use your own analysis there. Okay, so we've got this bucket here. These are the lowest in terms of volatility. Coca-Cola, Altria Group, Kellogg's, you get it. You know what we're looking at. Now, what we then did is we said, all right, let's take a look at the most volatile stocks that still pay a good dividend there. So here's a list of 20 stocks. You got Devon, Fang, a lot of energy stocks in the mix here. Again, same thing. Anything green is trading cheaper than the average in its sector. Anything red is trading more expensive relative to its peers there. Same thing. Energy sector, dividend, 1 month, year to date, and overall volatility, this time ranked from most volatile to least volatile. So you can see something like Devon Energy ranks at the top, pays 4.3, or hopefully pays 4.3. Good performance down on the year quite a bit, as with any energy stock in the mix there. Naturally, you might understand that some of these have higher yields just because they're beaten down on the year. One Oak at the highest. I don't think they're actually paying that anymore, but you got a lot of energy companies, dividends to be determined, but as of now, that's what they're reporting. Okay, here's what we wanted to do. Let's assume you took list number 1 and said the lowest volatility portfolio, and then you built a portfolio out of list number 2. So all of these pay dividends. Now what we want to do is say, is it worth the risk to have a higher fluctuating portfolio, more volatility, versus having a group that is of lower volatility? All right, so here we go. We're going to go over to the charts here. This year is a great year to actually look at the volatility of any portfolio or any mutual fund you're looking at, whatever you're doing. We manage our own portfolios here, so volatility is key, and I'll actually share one of them here with you in a second. Okay, in the orange line, you've got the high yield, low volatility stocks. That's the list right here. What we did is we built a portfolio, equal weighted them across the board, and we said, well, let's take a look at the performance. The purple line is the second list, highest yield, higher volatility in terms of returns there. You can already see, by the way, the gray, it just indicates a recession. So that's when we went into the recession. All right, so we'll go back here. What I wanted to show was January, February, almost everything was cool. Then we had the virus downturn, everything fell. Look at how sharp this fell. This was down more than the stock market. And to be fair, it's because a lot of these are energy stocks, but these fell really aggressively. Take a look at the lower volatile stocks here. They fell less than the market. The performance is more compressed. What would you rather ride, the bucking bronco or more of a snail, right? We want the snail, of course. You're trying to soak up dividends there, so take a look at that performance. And because the lower volatile stocks fell less, they're actually positive year to date, whereas these are still down. So you've still got a loss here of 22%. If you built it as a portfolio, you go back and you say, well, yeah, I got my average dividend. Oh, no, here, it's this one. I got my average dividend down here, 6%. Doesn't do you much good if you're down 22%, but you thought I'll go buy high yielding stocks. Be very careful. There's so many great YouTube videos out there on overall dividend investing, but they all stop right before we get to volatility. And I think it's because most people don't understand it. But anyways, so here's what we got. This is the performance overall. Now, to be fair, you would not go build a portfolio out of list number 1 or list number 2. Just wouldn't do it. Here's the reason why. We're going to take a little bit of a more detailed kind of a look here. Where do I go for that? I'm going to go right here. Okay, here is the high yield, high volatility type portfolio, and we're looking at the allocations here. Off to the right, naturally it's going to be heavier in energy. You got 33% of your portfolio in energy, and you could tell that by the list when we were showing it a second ago. You got 20% in banking, 15% in consumer cyclical. It's not very diverse, right? So that makes it tough. You're exposed to energy. Energy had a really bad year. That's the reason why this is down. Now take a look at our portfolio. We've got the Jazz Wealth Dividend Fund built into the mix. Now to be fair, we're more diverse. So we are going to be in the blue now. I don't know why it changes. I'm sorry. So we've got in the blue here. Year to date, we fell, right? A little bit more aggressive fall than the low volatility mix, but not anywhere near messing with the higher volatile stocks in the S&P 500. Because of that, we're back to even, right? It's actually slightly higher at the moment of this, but a day delayed on the data there. So why is that? Well, if we take a look at our portfolio, we go down to the allocations here, much more evenly spread, right? Notice how energy, 16%. Okay, it's fine. That's going to be the drag on the portfolio. Communication services in the mix, banking's in the mix, everything's in the mix here participating, and what we're doing inside of that is trying to compress volatility. What we don't want is to look at this list and say, whoa, thanks, Dustin. I got a list of the lowest volatile stocks averaging 4.4%. I think I'll take that. No, careful, right? That's not a diverse enough list. That's what we want to take a look at when we're looking at building a dividend portfolio. Now, to add to this, what I'm going to do, I'll just show you real quick. Here's our research site, jazzwealth.com/research. We share lots of data and stuff on things like this for customers and those of you that want to join. It's $13 a month. It just helps us keep building here. But anyways, what we do is we take a lot of data like this, and then we'll kind of share what we found. How does it work? You can look inside of all of this and see the performance and everything. We break every single thing down in terms of performance and volatility and try to teach you a little bit along the way. So if you want to check that out, jazzwealth.com/research. The idea behind today's video is volatility has to be a consideration when you are picking dividend stocks. Don't blindly go pick on the highest yielding REIT, right? You can have a few of those, move on over to banking, move on over and measure those together to see how they would perform in a stressed market, like the virus decline there, right? All right. Different type of video today. I hope you enjoyed it there. Let me know what you think down below. Remember, volatility is key. We've got elections coming up. I'm even moving my hands like the politicians do. So be sure to take that into consideration when you're building your portfolios. I wish you a great rest of the day. I thank you so much for watching and supporting us here at Jazz Wealth and watching our YouTube channel. It really, really helps us a lot. I do appreciate it. Enjoy the rest of your day.